Every Nigerian must be instrumental to the growth and development of our nation through the use of innovative energy and idea to lead and initiate policies that will sustain the economy and enhance good governance. With all the financial turmoil facing the world, it has become pertinent for exchange of new ideas that will enhance good governance. Please subscribe to our channels, listen to our messages and engage with us. With your support, we can transform the lives of all Nigerians. Welcome to the Season 2 of the NESG Radio.
Hello there. Welcome to the NESG podcast. My name is Oluwaseyi Vincent. Today we are going to be talking about the 2022 NESG Macroeconomic Outlook, titled The Last Mile, Reforms Towards Significant Improvement in National Economic Outcomes. With me are my amazing colleagues, Faith Iyoha, Shakiruddin Taiwo, and Sodiq Olofin. Hi guys.
Hello Shay.
Hello Shay.
Hello Shay, it's nice to be here with you.
Lovely to have you guys with me. So Shakiruddin, can you please give us an overview of the report?
So just like in the tradition of the NESG, so at the beginning of every year, so we always have time to chart a new course for the Nigerian economy, discuss pertinent policy issues that we feel the government needs to take note of in order to achieve some desired economic outcomes. So this year as well, we actually looked at the Nigerian economy and actually considered the timing of this government to possibly the government will be spending the last 18 months of his administration. And in line with the constitution, the Buhari government will be ending his reign or regime or as well as his administration. So we thought there is a need to bring core policy issues. Hence the title of our report, The Last Mile, refers towards significant improvement in national economic outcome. So this report is divided into two parts. A part covers events that shaped the Nigerian economy in 2021. Afterward, we reviewed the performance of the Nigerian economy in 2021, looking at how the real sector performed, key policy issues in the policy environment under the broad title of the fiscal policy environment, the monetary policy environment, and core regulatory issues that affect businesses. Thereafter, we actually assessed the Nigerian external sector towards understanding how Nigeria fared across trade, foreign investment inflows, and performance of our exchange rate. And also, we assessed how the Central Bank of Nigeria has performed within the scope of managing the Nigerian currency, Naira, against the most important currency globally as far as trade is concerned, the US dollars. Thereafter, we actually assessed how Nigeria would look in 2020. In achieving this or in carrying out this basic task, we actually understudied key events that would actually shape Nigerian economy in 2022. We identified the issues around Dangote refineries, looked at the issues around government decision in removal or retaining for subsidy, among other issues. So we actually also gave a 3 basic scenarios towards actually understanding how Nigerian economy will perform. So we have the best case scenario, the business as usual, and the worst case scenario. These scenarios are within some policy actions expected of government. And we actually rolled out some numbers across key macro indicators, the growth, inflation, exchange rate, and unemployment. And in this podcast, my colleagues and I will be speaking to all these issues.
Fantastic. I think that's very broad and very thorough overview of what we have in the report. So I think we'll move over to Sodiq. So Sodiq, can you please give us some key highlights from 2021? So what were some of the things that we saw that struck you that happened in 2021?
Well, against the belief of many of us, that we projected that the economy might not do too well. So based on our 2021 outlook, we expected the economy to grow by 2.9%. And luckily for us, the economy recorded a growth of 3.2% in 2021 rather, which is something that is so desirable for us. And we are all happy to see that. So also, despite the fact that we had such a performance, we had so many ups and downs. The economy expanded. We saw inflation reducing from the height of 18% to 17% average for the year. And we also saw some other positive things that happened in the year. We saw oil price increase, and we saw our export expanded. However, with the expansion in our import level, we discovered that we are not able to escape from our trade deficit. We also saw some improvement in other areas, like we are able to ensure that the exchange rate space is a little bit stable. We saw that our exchange rate, at least, we were able to maintain the exchange rate for a number of time at around 414 naira per US dollar. And so also we have quite a number of other things that happened that were positive. However, we still have some downside. The downside is that the exchange rate space is still very volatile. The CBN is still struggling to keep the forex market stable. We still have our trade data still on the negative territory. Import is still in excess of export. We still have our inflationary space. Despite the fact that it is reducing, we still have it at a high level where most of the poor people lose a substantial part of their purchasing power. So, in a nutshell, we have the good side to it and we have the bad side to it. But we are happy that in 2021, the economy is able to escape recession, and we hope to sustain it going forward.
Great. Yes. So just like you said, I think we did pretty well on economic growth. However, there were some downsides as well when we look at things such as the fiscal policy environment. So, Faith, can you please speak to the fiscal policy environment a little bit? So I know, for example, oil production did below what we expected in 2021. So what were some of the other things that you saw in fiscal policy in Nigeria?
Okay, essentially, let me just add to what my colleagues have said before I move into the fiscal space. So in this macro outlook, we wanted to look at low-hanging fruits for government before they leave the administration. What are the quick things they can actually do? So we went straight to look at, okay, the major thing we see is the PIA and how we can avoid subsidy removal, which is weighing down on fiscal policy, the fiscal space. Then we also looked at sectors that the government can quickly do things and get results. Specifically, if you look at these sectors, they are basically sectors that can drive the economy. They are sectors that can push growth. So let's come to the fiscal space. In the fiscal space, we saw government revenue not doing so well. Even if the oil price was more than forecast in the 2021 budget, we beat the forecast. I think it was about 55 or 40 something thereabouts.
The budget projection was 57. And at the end of the day, the year ended 80 something.
At the end of the day. And as of today, we are doing about $93 per barrel. So the oil price was good, but we found out that we're not producing enough. We had constraint from production. Government was not getting as much revenue that it should.
So can you speak to some of what these constraints were? What was constraining oil? I know, for example, maybe disruptions to production, I think was one of the
disruptions to production. We can also find development in advanced economy that led to reduction. We also see the OPEC quotas playing out at a point just to reduce supply so that they can push price up. So those were one of the things that happened. However, we also found out that instead of managing the fiscal space, especially with respect to borrowing, the government still wanted to do more. We want to do more, so they accumulated a lot of debt in the course of the year, and debt shot as high as $38 trillion, right?
Trillion
naira. So you find out that at that point, we are not looking at borrowing again. We are now looking at how sustainable this debt we are accumulating at. Even though if you look at debt to GDP, yes, we are fine. We are still below the threshold, which is about 3%, 3.2%. However, when you look at the revenue, debt service, what we pay for our debts, the cost of our debt, the interest on our debt, if you look at what we pay on this debt, we find out that we are spending about over 90% of our revenue.
Like in the first 5 months, it was 97% of revenue. However, I think the whole thing balanced up at the end of the year.
Yeah.
In November, the report said 76%. But that's still a very, very concerning situation for the country.
Because let's just look at it. Let's bring it close. You have 100 naira, right? The 100 naira that you're supposed to spend on yourself because you have a debt to pay. You're spending 76 naira to pay that debt. It means you have about 34 naira left. And what you're supposed to spend on is more than 34 naira. So that means you need to still borrow to finance your spending.
Exactly.
That's what it means. So our debt space was constrained, not because we are not getting enough revenue, but because we had accumulated debt. Our fiscal space rather was constrained, not because we are not getting enough revenue, but we have accumulated debt. And we need to continue paying, while we also need to finance our expenditure. For example, as an individual, you must eat. So even if you have debt to pay, while you are paying your debt, you must continue to consume. And if what you have paid for your debt has taken a lot of your revenue, what happens? You need to borrow more to finance your personal expenses.
Exactly.
But it's actually understandable that rather Nigeria has a significant problem with the revenue side, not the spending side. So globally, countries at the level of development of Nigeria would have to spend more on infrastructure development, would have to spend more on getting a lot of things fixed to actually improve the business and investment climate in Nigeria generally. So the spending level of Nigeria to some people is still below the level required to actually spur productive growth. However, the revenue issue, it's like one core critical problem or issue that fiscal space in 2021 actually brought to the top burner. So like if you look at the numbers, Nigeria revenue for the year, January to November, was 4.3. So which is far lower than the 6.8 that was actually projected for the year. So then we start asking some questions. What is the problem with our revenue? Why is the government not generating as much as it has projected or planned? Are there core structural issues that government needs to address, either in the oil sector or on the non-oil space? So these are critical questions that our report actually highlighted for government to actually consider in 2022.
In
Fantastic. Okay, so Sadiq Saad has something to say.
I would like to come in 3 ways. Firstly, concerning one of the reform areas that we have highlighted, and that's one of the reasons why we feel the NESG2 appeared to have supported the government in terms of subsidy removal. We discovered that despite the fact that we have issues around the OPEC quota, we have issues around constraint in production in that sector, we discovered that the increase in oil prices is also translating to increase in the cost of subsidy for the government. So the benefit that the government is supposed to get as a result of increase in oil price is also coming back on the government in terms of subsidy. So the subsidy you are paying as a result of the increase in oil price is also increasing, unlike a period when the oil price was low. For example, in 2020, where for some of the oil price indicator, we had it in the negative region. So the subsidy you pay during the year, I think in one of the reports there was a place we quoted the number where the subsidy paid in 2020 was about 407 billion, while in 2021 it's skyrocketed to about 1.77 trillion. So you can see the gap or the responses of subsidy payments to increase in oil price. So this is also a constraint on the government, and one of the reasons why a lot of analysts and stakeholders have been saying that we need to do away with this. So on the second front is about the issue of I would like to digress a little. It doesn't mean we are not in concurrence, but a lot of analysts have been saying we have revenue problem, we have expenditure problem, we have debt problem. However, these are integrated issues that we think the government should look into at the same time, irrespective of how much you feel you need to spend. I believe the US is almost every year running a deficit, despite the fact that they have a budget of $3 trillion. So US government, if possible, the US government will continue to spend, despite the fact that they are having revenue that is almost times 10 of our GDP. So if possible, they will want to be spending more. However, irrespective of how much you feel like spending, in the interest of your macro space, you need to consider the capacity of your economy or your own capacity to be able to manage the level of expenditure you want to maintain. So in my own view, and based on some of the numbers that we have seen that the revenue for over the past 5 years, for the 5 years, we can trace it back to 2013, 2014. We discovered that the revenue had maintained a sustainable level. Do I call it sustainable level? A stable level, where it is not going beyond a particular, maybe growing 5%, 4%, 3%. And it has been doing that since Nigeria was out of recession in 2017. So you discover that we have a revenue level that we are matching.
They're unable to breach.
So we are not able to breach that revenue level. However, we are trying to target a particular expenditure level where we cannot meet. So it's both revenue problem, expenditure management problem, and at the same time, our debt situation problem. So maybe as we continue our conversation, I will recall the third thing I wanted to talk about.
Okay. So do you think investors are getting worried about Nigeria's debt? So we've talked about the fact that it's somewhat of an issue given the fact that expenditure seems to be growing faster than our revenue. But do you think this is concerning investors? Do you think it's affecting our macro environment? And investors are saying, we're not going to put money into Nigeria because debt seems to be growing too fast.
I think for a lot of investors globally, investing in debts of countries is actually not an issue. So, but the core issue, they actually look at issue around macro stability. So they look at issue around what's our monetary policy management stance. So there we'll be talking about, so what's Nigeria policy around the exchange rate? So when the risk premium, as far as the market risk premium is concerned, is higher, so it's going to discourage investors. And this comes to what's the liquidity in Nigerian FX market. An investor is coming in with an X amount of naira, comes in and exchange his US dollars or foreign currency at a rate, then at the time is to recruit investment, and he has issue around capital freeze, so where there has to be rationing before investors. So these are core issues investors look at. And when we check the numbers around inflow of FDI into the country, and majorly this year FPI, we understand that our FDI for Q1 to Q3, which is the first to third quarter of 2021, was at 0.3 billion, that is 300 million USD. So that is too small for an economy that is as big as Nigeria. Nigerian economy is close to $500 billion in terms of dollar and around $428 billion. Then the FDI, which is core productivity enhancing investment, capital inflow, is $300 million. And when you look at the FPI that actually came into Nigeria in last year within this period as well, is around $2.7 billion. That is grossly inefficient. So it's sending a message around the perspective of investor to your macro. Our growth last year was largely driven by the comparison with a period 2020 where growth was down. So we did a negative minus 6.1, minus 4.3 in Q2 and Q3 of last year. Then we did the 0.01. So when you compare with a period this year, so you see in sense of macro stability, and our growth has been at a level below 3% or at 3% and on an annual basis. So the investor will look at this: is this growth enough to spur productive activities. So the answer might be, you have the answer already. Then they look at what are other key policy or regulatory issues you have, majorly around investment. So we actually observe that investors are like indifferent about what is happening in Nigeria. So Nigeria was not a preferable destination last year in 2001.
Okay, essentially, in addition to what Shakirude has said about whether debt is an issue for investors, right? While we understand that it may not be directly linked to investment, but there is an indirect link to investment because people are bringing money and they are also thinking of recouping something better from the economy. So you ask someone to bring the money. Your country is in debt, is in a serious debt, and you will need to pay your debt. We find out that oil price is doing well, oil production is not doing well, so revenue is constrained. In-house, we are unable to do well in non-oil tax, even if it has improved. So we still have shortfall when we compare revenue to expenditure. So the government will definitely look for where to get more money. So it's either the government borrows or the government levy taxes. So if you're bringing your money to an economy where the debt is high and they are looking for other sources of shoring up revenue, it means they have to go to taxation. And if you look at the Finance Act for 2022, so you see
2021 Finance Act.
So you see taxation. They've levied tax, increased the taxation on So you find out that will be a discouragement for investors because I'm bringing my money and taxation is going up in this country, because it means if we still continue in this problem, government will still find a way to show off revenue and they will increase taxation again. So it means as tax is going up, it's eroding, and they are collecting more of my money. I'm not getting the revenue I should get. The policy environment is uncertain. You find out that the macroeconomic indicators, interest rates, inflation, exchange rates, uncertainty everywhere. So you find out that investors will be discouraged. So even if it's not the debt, but there's this fear that the government will always want to spend. They will always look for where to get money. If they can't borrow domestically or externally, they will levy taxes, and I'll be suffering from taxation when I'm not really making so much from the economy.
You can get the report at www.nesgroup.org/Outlook 2022. So that's www.nesgroup.org/Outlook 2022. And also catch us up across all our socials at official NESG. My name is Oluwasei Vincent, and on behalf of myself and my colleagues here in the studio, do have a great one. Thank you, everybody.
Thank you for listening to our content today. Remember to subscribe to the NESG Radio. Follow us across all social media channels and visit our website www.nesgroup.org/NESG Radio. NESG, in the national interest.